Welcome to the March 11th, 2024 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. How high can the market go? How long can the market rally last? Well, we did some research. And of course, the team that cares is looking at prior events to see if they can give us a clue. Now, it doesn't guarantee the future, but I wanted to give you a time period in here. This is 1993 to 1999. That was the PC revolution. And that bull market essentially lasted from 1995 up to the year 2000, and then we got the tech wreck. Well, what does that teach us about the current environment and the Fed? So how long can the equity market rally last? The answer is a lot of times a lot longer than you think. Now, here's what happened. 1994, the Fed tightened. Back in 1993, the three major non-communist economies grew at an annualized pace of 7%. Well, that triggers the Fed on inflation, and they raised rates. So you could see right here this deterioration. But about 1995, corporate profits started to rise. It was productivity. Now, there's a parallel to this. The AI super cycle contributed to a 3.2% productivity gain last quarter. That's good news because productivity had been suffering, and of course corporate profits are dependent on productivity. Anyway, S&P 500 starts to rise. What's this right here? This is a key point. Alan Greenspan, Fed chair, right? Federal Reserve doesn't like market rallies because happy people go buy stuff and it creates inflation. Well, here he said, the market is experiencing irrational exuberance. Now, the interpretation was he's going to raise the rate so high that he kills the rally. Didn't happen. And matter of fact, irrationally exuberant in 96, but look what happened. It continued for 3 more years. Wow. And I'm not saying this bull market is going to last that period of time because some of it's based on government stimulus. However, this is important because it seemed exuberant here, but profits continued to rise. Productivity and the AI super cycle could be very, very similar in increasing productivity, making great decisions. Speaking of great decisions, I'm Spencer McGowan, your financial weatherman. Those of you that were subscribed last year got to hear what we were buying and when we were buying it, and I'm going to cover some of the results before the video's over. I'm President, McGowanGroup Wealth Management, a team of 10, the team that cares, highly experienced professionals in financial services dedicated to our clients, from helping with the estate planning attorney to tax, as well as financial plans that can show you what you're going to look like in 2060. All right. Thank you for joining us today. Next slide. Dow Jones Industrial Average, about a 3.8% year-to-date return. S&P 500 is about 8%. A lot driven by the AI super cycle with NVIDIA, Supermicro, and others having big gains, and Microsoft doing well. I'm also going to show you a category that is actually doing better than the S&P with a higher yield. Let's first go to the jobs market. Wow. This is the net new jobs created by the U.S. economy every month. And notice there's no negative numbers in here. That would be a recession or a recession signal. So we want to watch this number. Look at this. Inflation actually peaked in June of 22. What significantly contributed? 862,000, nearly 1 million net new jobs created back in February of 22. Obviously that's inflationary. Well, that number's been coming down, but 275,000 net new jobs in the month of February is good news. That's a continued economy. And one of the things we debugged for our subscribers was actually way back when they were saying, oh, looming recession. You heard that all through 2022, looming recession to begin 23. Well, it might have been looming, but this number tells us, well, it's not looming yet. What could cause the next recession? Well, one of the contributors would be a lot of government stimulus has gone into the economy, and government jobs and healthcare jobs are the biggest contributors, right, to some of the jobs growth. They're the top contributors. When that spending flattens out, you are going to see much slower growth. And you want to be subscribed because we're going to bring you the up-to-date news that can tell you when to start accelerating profits. We're already increasing tactical safety in the portfolio. I wanted to cover pipelines because pipelines are up 10% year to date plus a big yield and a rising yield based upon the past few quarters. This is Dallas-based Energy Transfer. To understand this cycle, so Energy Transfer comes public back in 2006, hit a low of $3, hit a high of 35. This is when the shale revolution oversupplied the world with oil and gas. And Energy Transfer was spending $2 billion a quarter. By the way, it's not a recommendation for your portfolio until you go to networthradio.com and get a written plan from us. And there's always price risk indicated by this. It went from 35 to 5. Wow. And part of that was because, yes, we had a cycle in the commodities. Oil was 100 up here and very quickly went back well. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.